Hello, this is the TradeSite Forex market preview and international economic data roadmap for the week beginning Sunday, the 15th of December, 2019, ending Friday the 20th. Hope you had a good week. It was kind of slow several days, although we did have a couple of winners in Forex. Let's just talk about where we're at here. This is triple expiration week. Friday will be expiration of options, commodities, and everything that goes with it. So that can slow the market down on Friday, even the Forex market a bit because there are futures on the currencies. And we're in the last 2.5 weeks of the year, amazingly. Um, Obviously, the week of Christmas is typically slow, so maybe this is our last chance, and we've had a slow Forex market really all year. Let's talk about that. Here's a look at the dollar index daily chart, and as you can see, we're right in the middle of what is essentially a 3.5 point range that at least takes you back to April, and it wasn't much different before that. So it has been one of the narrower years for Forex in general and the dollar index that we've seen in a long time. Here's the euro dollars. That's basically the inverse of the dollar index, and it's close to a 13 sell signal. We'll get one if we have another up day on first day of the week here. Same thing with the pound, but this one, oh no, sorry, this is only three. We had a 13 sell signal here a while back. We've now violated that risk line. I say a while back, less than 2 weeks ago. We've now violated that risk line with the close. So if we take out the high of this candle, it's completely dead. But otherwise, that 13 is still in place. Here's the Aussie dollar, and nothing going on here at all. Here's the euro yen. Nothing going on here at all. Tried to spike up and came right back. Pound yen, same deal. Remember, all this is Brexit related stuff at this point. New Zealand dollar didn't do much this week. All right, let's take a look at the intraday or interweek action, 30-minute candles for the whole week. High to low of the week is 160 pips on the euro. If you look at Monday, Tuesday, and Wednesday, it was 40 pips. So it's not until I say that it's really 150 pips for the whole week, and uh, it was not much. It was 40 pips for, or not even that, for Monday, Tuesday, Wednesday. It's horrible. The pound traded a little bit better for us, and of course the spike on the election vote there. It'll be interesting to see how all of that plays out. Doesn't look positive to me. Here's a look at the economic data that's coming out this week. So Sunday at 5 p.m. at night Eastern time. These are all Eastern times. Australia's flash manufacturing and services PMI numbers. UK's Rightmove HPI. That's the housing price index. Flash manufacturing PMI out of Japan. Fixed asset investment out of China. Industrial production, retail sales, the unemployment rate out of China. On Monday at 3:15 a.m. So we actually, this is a series here. We've got French, then German, then the broad European, then the UK flash manufacturing PMI and services PMI numbers. Foreign securities purchases, Empire State Manufacturing Index, flash manufacturing PMI, flash services PMI, NAHB housing market index. We got the bank stress tests out of the UK and minutes from the last, essentially their version of the Fed meeting. We got the Westpac consumer sentiment out of New Zealand. Tick long-term purchases out of here in the U.S. It's at the close on the stock market close on Monday. ANZ business conference out of New Zealand that night. Monetary policy meeting minutes and home loans out of Australia. Going into Tuesday, Italian trade balance, unemployment rate out of the UK, trade balance out of Europe, CBI industrial order expectations, manufacturing sales out of Canada, housing starts and building permits here in the U.S., capacity utilization, industrial production here in the U.S., GDP price index out of New Zealand, JOLTS job openings out of the U.S., IBD tip economic optimism number, CB leading index out of Australia, New Zealand's current account, MI leading index out of Australia, trade balance out of Japan, German PPI, UK's got their CPI, PPI, HPI, all of their inflation numbers. I love how they put those all out at the same time, 4:30 a.m. Eastern time on Wednesday. Europe's final CPI number. U.S. My Fed member speaking. We got the CBI realized sales out of the UK. The inflationary CPI numbers out of Canada at 8:30 a.m. Eastern time on Wednesday. Crude oil inventories here in the U.S., GDP out of New Zealand, and trade balance that night. Employment change and unemployment rate out of Australia that night. Japan's rate announcement at some point going into Thursday in their press conference. Swiss trade balance, retail sales out of the UK, and then we've got the UK Bank of England rate announcement. Canada's ADP non-farm employment change, wholesale sales out of Canada, Philly Fed manufacturing index out of the U.S., current account and unemployment claims out of the U.S. CB leading index out of here in the U.S. That's at 10 a.m. Eastern Time on Thursday, along with existing home sales and natty gas. National core CPI out of Japan, consumer confidence out of the UK, credit card spending out of New Zealand, German's GFK, consumer climate, French consumer spending, current account out of Europe, current account out of the UK, along with their final GDP number from the third quarter. High street lending out of the UK. Core retail sales out of Canada, along with our final GDP here in the US from the third quarter. That doesn't adjust much. Consumer confidence out of Europe, core PC price index, along with personal income and spending, and revised University of Michigan sentiment here in the US. So a lot of data, a couple of rate announcements from major banks. That's it. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading week as we head into the holidays.